Welcome to the Thursday edition of Tech Stocks Daily, where we dive into today's exhilarating market moves. On the docket, Datadog's surprising descent despite a solid earnings showing. What went wrong with those future projections? We'll also celebrate Pitney Bowes riding high with stellar performance and stock gains that leave analysts impressed. Next, Apple makes a daring return to advertising on X and strategizes with Chinese AI alliances. Will it revitalize their market edge? Plus, the trade desk faces a whiplash stock tumble amidst legal buzz. But is there a silver lining for the ad tech giant? Stick with us as we unravel these narratives and more. So grab your headphones and let's get into it. All right, folks, let's dive into the world of tech stocks and peel back the layers of today's star player, Datadog. Despite delivering quite the upbeat earnings performance, Datadog couldn't quite fetch the popular vote on Wall Street today, sending its stock into a tailspin. The company's shares nosedived by a surprising 8.4%, causing quite the storm amid the relatively cheerful skies over the S&P 500 and the NASDAQ, which saw gains. First off, let's talk the good news. Datadog, a big name in the SaaS realm known for helping businesses keep tabs on their data with monitoring and analytics solutions, placed a strong Q4 earnings report on the table for 2024. They beat the forecast with earnings per share at 49, surpassing the 43 analyst expectation. And the revenue? A pleasing $738 million, a year-over-year increase of 25%. They're at the top of their class when it comes to wooing the big spenders. 462 customers now dish out $1 million or more annually, up by 17% from last year. However, when it came to their projection for 2025, there was a bit of egg on face. Despite the glossy Q4 numbers, Datadog's future outlook pushed them into the investor doghouse. With projections showing a slowdown in revenue growth to just 18 to 19%, chalk up a fair share of frowns. Their anticipated earnings of $1.65 to $1.70 per share failed to hit the high marks Wall Street analysts were mapping out at close to $2 a share. Adding salt to the wound, CEO Olivier Pomel shied away from directly addressing this flustered outlook on the earnings call, turning instead to parade their shiny new offerings and features in AI and cloud migration. Don't get me wrong, from customer growth to the solid business moves, like their $1 billion convertible senior notes with a sweet little 0% interest rate, Datadog's got plenty to flaunt. But managing all these expansions seemed to outline their tightening budget constraints too starkly for analysts' comfort. It's a whirlwind show between celebrating a year's hard-fought gains and facing the fickle future filled with big challenges like rapid industry innovation and increased spending on product R&D. To wrap it up, Datadog is embarking on an innovation journey akin to an obstacle course, teetering between growth optimism and fiscal realism. As investors digest these tidbits of mixed fortune, the coming quarters will tell whether Datadog's bark is as good as its bite in staying atop its fiercely competitive industry landscape. Keep those binoculars trained, because this tech narrative is just heating up. Hey tech enthusiasts, hope you're strapped in because today we're diving into the hot topic of the hour, Pitney Bowes, a company that's been capturing the spotlight in the tech world, and investors aren't complaining. First off, Pitney Bowes is making waves with impressive earnings estimates and solid stock performance, as seen in the upward trend of the Zacks rank. This technology company, known for its mailing equipment and software solutions, has been on an upward swing, with its stock making significant strides over the past month. Get this, their stock price surged a whopping 34.1%. That's almost as impressive as when someone figures out how to format an Excel sheet on the first try. No wonder investors are buzzing. Analysts have been plagued by optimism regarding its earnings outlook. As Pitney Bowes inches up in stock price, its successful estimate in earnings continues to gain momentum. For the current quarter, predictions have been hitting high notes with expectations for earnings per share climbing by a staggering 2,900% compared to last year's numbers. The forecast for the full year anticipates an increase of a cool 47.56%. Let's just say Pitney Bowes is anticipated to pop your investment like a microwave popcorn. But wait, there's more. The company's impressive performance hasn't gone unnoticed in style scores either. Boasting a momentum score of A and strong growth and value scores of B, Pitney Bowes is essentially a triple threat in the stock game right now. Its trading value, in fact, remains attractively low relative to the competition. It's like finding a brand new tech gadget on a Black Friday sale. Further fueling the frenzy is Pitney Bowes' stellar history surrounding earnings reports. This company has a slew of positive surprises up its sleeve, consistently outperforming earnings estimates for the past 4 quarters. Most recently, Pitney Bowes pulled off a Houdini by reporting EPS of 32 cents against consensus estimates of just 0.16 cents. Can anyone say overachiever? Investors naturally are pumped as such patterns favorably influence stock value and compel others to jump on the bandwagon. With the Zacks rank pointing to a strong buy, the company offers both sensible growth potential and impressive momentum. If you dream of too good to be true bargains without spending all your gadget money, well, Pitney Bowes is presenting an invitation. In a nutshell, Pitney Bowes is winning the numbers game and inviting favorable pressures in its industry. If you're looking to invest in something that boasts both growth prospects and more green days on the charts, Pitney Bowes just might be your ticker tape hero. So, for all you traders, analysts, and tech aficionados eyeing your next investment fly high, don't forget to jot down Pitney Bowes. The only thing soaring quicker might be a drone. Stay curious, stay informed, and get ready to make some smart tech stock moves. Let's dive into why Apple's been lighting up the tech news today with its big moves and strategies. First up, Apple is back in the advertising game on the social media platform X, a return that comes after a dramatic 15-month hiatus. The tech behemoth, along with several other companies, had taken a step back from advertising on X after Elon Musk, the platform's owner, controversially agreed with and amplified a post with anti-Semitic content. That caused a stir and saw big advertisers like Apple pull the plug temporarily. Fast forward to now, Apple has decided it's time to strategically re-enter, starting with privacy-focused Safari ads and hype for their Apple TV gem, Severance. They're not alone. Even Amazon is upping the ante on X, with the advertising stars aligning for a potential turnaround for X under Musk's stewardship. Next on the list, Apple's sparring with giants in the technology hardware, storage and peripherals industry, and analysts are crunching the numbers to see how they stack up. Despite juggernaut status, Apple's price-to-earnings, price-to-book, and price-to-sales ratios paint a picture of potential overvaluation compared to peers. However, their high return on equity and stellar earnings suggest they're doing just fine when it comes to pulling profits out of their hat. It seems, even in the face of some dwindling revenue growth, Apple's financial ecosystem is strong, creating a nuanced picture of potential for investors. Lastly, Apple's venturing into AI in China in partnership with Alibaba has tongues wagging. This could be a game changer for Apple as it faces a cooling period with an average quarterly decline in China sales, partly due to Chinese consumers gravitating toward domestic competitors like Xiaomi. With the likely launch of AI capabilities dubbed Apple Intelligence, hopes are high that this smart strategy could revitalize iPhone sales in this vast market. Renegotiated partnerships indicate an awareness of the shifting landscape and Apple's desire to evolve with it, especially with rivals Xiaomi and Huawei making Android waves with AI. The risk could reward as new AI integration may reinvigorate Apple's position in China and Europe. In sum, Apple is making waves across every key sphere, from social media strategies to competitive positioning and futuristic AI endeavors. Their multidimensional playbook highlights a company determined to reimagine, adapt, and potentially capitalize on both tech advancements and reconciliatory forays in some very tech-savvy markets. Whether you're in the stock game or just love to follow tech titans wrestling for market glory, Apple's maneuvers are undoubtedly ones to watch closely. All right, tech lovers, buckle up, because the trade desk has been making headlines today, and it's not for creating the latest viral dance craze or releasing a hot new gadget. Nope, they reported their financial results, and let's just say it wasn't the fairy tale ending investors were hoping for. So, what went down? The trade desk, a heavyweight in the advertising technology space, just took a financial nosedive. They reported their fourth quarter and full year 2024 earnings, and while there were some highs, the lows were much more pronounced. The company announced a revenue figure of $741 million for the quarter, which, while a 22% year-over-year increase, fell short of both their own guidance and analyst projections. It's kind of like ordering a 4-cheese pizza with extra cheese and getting a flatbread with a sprinkle of cheddar. Technically still pizza, but not what you had in mind. As a result, their share price plunged over 30%. Yes, stockholders were feeling the blues, or should I say reds, given the downward charts. Adding to the drama, the beloved trade gurus at the trade desk are facing the music from conscientious folks over at Block & Leviton. Yes, they're investigating the company for potential securities fraud violations. Yikes. Nothing like the SEC breathing down your neck to liven up your stock ticker, am I right? The founder and CEO, Jeff Green, highlighted their positive achievements, but acknowledged the shortfall in Q4, admitting that, they sort of fell short of their own expectations. Their projected Q1 2025 revenue also added to investor jitters, as it sits below what closet Wall Street prognosticators had been hoping for, which is worse than finding out your crush thinks your best friend is cuter. Now, some analysts are doing what they do best, adjusting their expectations. Meanwhile, others, like our friends at Block & Leviton, are suggesting that if you've lost money, you might want to get in touch and learn about your options to possibly recover those losses. They're even calling out to potential whistleblowers for a little conversation about any non-public info they might want to share about the trade desk. So there you have it, folks. A head-spinning day for the trade desk. I know you're dying to chime in. What do you think, dear viewers? Investment opportunity of a lifetime, or time to steer clear? Get your keyboards ready and scribe your thoughts in the comments section, because you know I love hearing your takes as much as an AI enjoys compiling them. As always, thanks for keeping it tuned to the juiciest nuggets of tech news. Jump in the comments, let's get chatting about the trade desk's roller coaster of a day, and remember, tomorrow's another day filled with tech surprises. Let's zero in on the trade desk and take a closer look at what might be the game plan for anyone considering this stock. Judging from today's tech news blitz, here's the lowdown and I fused with my tech perspective. Given the news today, I'd lean towards saying hold if you're already invested, and let me break it down for you. 1. Stock price plunge. The trade desk saw a steep 30% drop in its share price following its earnings report, which is as dramatic as any Shakespearean tragedy, sans the poison goblets. This isn't an ideal buying signal, as the market is clearly reacting to missed expectations and disappointment over their revenue outcomes. 2. Securities fraud investigation. There's some unease brewing with securities fraud investigations by Block & Leviton. Now, we don't want to grab the popcorn just yet, but it's definitely a giant red flag. Depending on the outcome, this could seriously impact the company's bottom line and public perception. 3. Analyst adjustments. Analysts are gyrating more than an old PC fan blade, adjusting expectations and taking a wait-and-see approach. This isn't necessarily permanent doom and gloom, as it often means a period of stabilization might be on the horizon, with closely watched future announcements. 4. Potential opportunities. While there's turbulence, volatility can often deliver opportunities. The trade desk still possesses a core ad tech business with growth potential. 22% year-over-year revenue growth is not a shabby, but misses could indicate a chance to regroup. Given the current scenario, if you're an existing investor, holding might be your safest bet while you keep gauging market responses and any updates on those legal storms. This is also the golden moment to dive deep into more comprehensive research and wait for further company communications to see how these events shape the stability and strategic direction of the trade desk. But remember, folks, what's right for you, peppered with my sassy review, is ultimately your call. Go through your risk management spice rack and do your personal research before any investing kitchen makeovers. Hit those balance sheets, scrutinize trends, and idealize your investing spices, because at the end of the day, your financial picnic basket deserves only your best setup. Keep your eyes peeled and your strategies even peeleder. Today's market scene was a roller coaster of thrills and chills, folks. We saw Datadog pulling off a surprise nosedive despite solid earnings, thanks to cloudy projections. Meanwhile, Pitney Bowes proved it's not all about dog-eat-dog antics on Wall Street, celebrating a major upswing with an investor-winning profile. Apple, ever the savvy player, maneuvered its way back into social media and boosted its tech prowess from China to far and wide. Last but not least, the trade desk faced both market and legal turbulence, reminding us that the ad tech terrain can be as unpredictable as it is potentially rewarding. If you love this edition, don't forget to like and subscribe to stay looped in on the latest tech mysteries unraveling across the market. Share the wealth of tech wisdom with your comrades, and definitely tune in tomorrow for more analysis, wit, and tech magic. Your front row seat to real-time market action is just a click away.